and welcome. You're tuned into Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me Cheryl D'Souza. And viewers, this is the show where you get answers for all your stock-related queries. In a short while from now, we will connect with our experts to help you better in all your stock-related queries. But before that, let's have a look at what the markets are up to. So Cheryl, feels a little different working on a Saturday and with this Buy Now Sell Now show, but indeed the markets are in a cheerful mode. There was a mild dip in the bank nifty, but once again we are seen to be inching higher.
Absolutely. A very good morning to you, Shrishti. Hope you're having a bright Saturday morning. And I must say that this is a dream come true, mostly for all of our viewers who've been actually asking us time and again. I think you guys need to have a show even on the weekend and Saturday edition. So this is for all of y'all who've been waiting for a Saturday edition of Buy Now, Sell Now. There you go. We fulfilled it, and hopefully we don't have to do this once again anytime soon. But yeah, let's talk about what the markets are doing at this point in time. And if you look at the markets, like Shrishti said, that yes, we did see a dip in the markets. From there on, now we are actually clawing back, and we are seeing some sort of a green on the screen, with the Nifty Bank taking the lead this time around. 0.6% uptick coming in for Nifty Bank as we speak. Talking about the advanced decline ratio, very much tilted in the favor of the gainers as of now, but initial hours of the trading session, let's see how that pans out. If you look at the list of gainers right now, you have Coal India, Power Grid, NTPC, Apollo Hospitals, as well as HDFC Bank that's actually gaining in trade, while on the flip side, it is HUL that's seen a downtick above 3% on back of earnings. We'll have Vinny joining us shortly to actually outline the earnings of all HUL. You have IndusInd Bank, Wipro, as well as Nestle on the losing end. Add to that list, as well as TCS is also seeing some sort of a red on the screen. Talking about the sectoral indices, then is the PSU sector in particular that is rallying in trade. 1.7% uptick coming for PSU sector. In fact, for PSU space, take a look at the railway stocks, be it RBNL, IRCON International, or IRFC. All of them are seeing spectacular surge in today's trading session. There you go, locked in upper circuit, that is RVNL for you. IRFC also clocking good gains. IRCON International up about 12% or so. You have Power also seeing good gains. Broader markets holding on to gains. While on the flip side, you have the Realty Index that's under pressure because you have a slew of downgrades coming in from CLSA on some of those counters. So that's the way how the markets are looking like at this point in time. Shrishti, yes, taking Saturday trading in its stride.
Well, yes, absolutely. So that's the way how the markets are panning out. But with this, viewers, there are a lot of earnings that have come through during this particular week. And for today, let's look at some of the result candidates and the reactions that we are seeing on them. Reliance Industries as well as HUL, the both are in focus. And firstly, let's talk about the FMCG major HUL, wherein in Q3, the company missed the street estimates numbers with the revenue marginally declining on a YOY basis. And even the volume growth was not that exciting. Let's go across to my colleague Vinny Motiwala, who is here with all the number crunching. Take it away, Vinny.
A miss that came in on HUL's Q3 numbers when you're looking at it. Muted revenue growth, even the profits of the company, nothing exciting, just the 0.6% growth. And the volume growth that came in, and as expected, was in the low single digit, 2% volume growth is what we are seeing. Now, in terms of commentary also that we are highlighting from the management, similar to what we've seen in the last couple of quarters, the premium products are doing well. Mass products still a bit subdued in terms of versus the premium products. Winter category this time around was impacted due to the delay in the winter season. Rural still not seeing a recovery, quite subdued in trade over there. And this time for HUL, they've seen a pricing growth to be at negative in Q3 because they've taken price cut in certain products of theirs as well. Company also highlighted that coffee and HFD segment that is seeing higher raw material costs even as of now, and especially in segments something like a detergent, personal wash and tea, that's seeing a bit of a higher competition from regional and local players as of now as well. Yes, so that's the trend that has continued even now, and on the back of this, we've seen downgrades actually coming in from HUL. For CLSA, they've downgraded the stock to an underperform from a previous outperform rating, and target price is also cut. EPS is also cut for FY24 to FY26 by 3 to 4% as well by CLSA. HSBC2 has downgraded the stock to a reduced from a previous hold rating and cut the target price as well. Similarly, Dolat Capital and Haitong 2 have downgraded the stock and cut the target price. So we've seen downgrade as well as cut in target price coming in for HUL, and that is why we're seeing the stock is also down and out in trade.
All right, thank you so much for that, Vinny, for outlining how are the numbers coming in for HUL, given the fact that it was miss on all counts and also the volume growth. That also was pretty subdued, just a volume growth of about 2% or so. And you can see the reaction that's coming in for the counter. The stock is trading lower. In fact, it's at the day's lowest point as we speak, 3% downtick coming in for HUL. You have brokerages also coming out with their views, one of them being Morgan Stanley, who's cut the target coming in for HUL to about 2,464 rupees from earlier 2,502 rupees. And there you see on your screen what the brokerages have done and what's the call coming in. Most of them actually gone ahead and cut the target. BCLSA, HSBC, Haitong, as well as Morgan Stanley, like I mentioned, that one also has gone ahead and cut the target coming in for HUL. So yes, brokerages are not too enthused coming in for HUL. But what's the scene when it comes to Reliance Industries? Because that major surprised the street yesterday, or at least surprised all of us in the newsroom with the earnings coming in at 6:30. I'm sure Soumit, who's been covering this particular counter for years now. Soumit, were you pleasantly surprised or no?
Surprise on the timing of announcement of the result, but not big surprise for the street when it comes to the earnings itself. If you see, slight bit to what the street was estimating on the EBITDA front. The estimates was around 40,200 crore rupees, but the company reported an EBITDA of close to 40,656 crore rupees. Apart from that, all other numbers are pretty much in line with what the street was estimating. Now, from where has this beat come in for Reliance Industries on the EBITDA front? Now, this has specifically come from the gas exploration segment. Street was estimating the gas exploration segment EBITDA to be close to around 5,200 crore rupees, but the company has reported a gas exploration segment EBITDA of close to 5,800 crore rupees. Clear 12% beat here, owing to lower cost, not also because of higher volumes, because higher volumes were already factored in. It was a lower cost that has led to this beat in the gas exploration segment. Apart from that, the O2C EBITDA and retail EBITDA has come in pretty much in line with what the street was estimating. O2C segment on a sequential basis, if you see, has seen a decline because of plant shutdown and lower petrochemical margins that we had seen in the third quarter of FY23. Apart from that, if you see the company's net debt, that was also just slightly higher, 1% higher on a sequential basis at close to 1.19 lakh crore rupees. And when it comes to the Geo number, be it revenue, be it EBITDA, be it net profit, all were pretty much in line with what the street was estimating. ARPU number was a bit of disappointment. It has come in flat at close to 181.7 rupees per user per month, but there was some beat on the subscriber base, and that has actually led to an overall inline set of numbers when it comes to Reliance Jio itself. Now, Reliance Jio subscriber base has continued to grow for the 7th consecutive quarter, and they also mentioned that nearly 9 crore of their subscribers have moved to 5G, which is nearly 19% of the total subscriber base of Reliance and Jio. To sum it up, overall the numbers were a slight beat, purely led by the gas exploration segment. Apart from that, all other segments, be it O2C, retail, telecom, were pretty much in line with what the street was estimating.
All right, Soumit, thank you so much for breaking down the numbers for Reliance for us and our viewers as well. And post the earnings, the kind of a reaction that we have seen, there was a bit of a decline in Reliance, but it seemed to be recovering and definitely giving some boost to the benchmark indices as well. Reliance gaining almost 0.6% as of now. But with this, viewers, it's time to slip into a very short break. Don't go anywhere. As we come right back, it's time to take all your stock-related queries, so stay tuned.
Welcome back. You're watching Buy Now, Sell on ET Now. This is a special Saturday edition for all of our viewers, and we have our experts also joining us. We have Kunal Bothra as well as Vivek Karwa who are joining us today. Very good morning, gentlemen. Good morning, Kunal. Good morning, Vivek. It's so good to see both of you all on a Saturday morning. News channels, so we are used to working on Saturdays, but how are you all feeling about this, Kunal?
Yeah, I think it's good change for, a change for the good for hopefully a better cause. So, no complaints.
All right. And Vivek, what about you?
Firstly, Jai Shri Ram to all of you. And that sums it up.
All right, then Kunal, let me take the first query to you then, because Prakash Nayak from Hyderabad has written, and he's firstly he said good morning and happy Saturday, and he wants to know about Voltas. His investment price was around 883. He has 200 shares of this one. He wants to hold it for the next 1 year time period or so, but he wants to know what's the expected target by December.
Well, bullish on the stock for that kind of a time frame. So another 9 to 12 months for Voltas. And on the upside, I would believe that the previous high should be taken out in this phase of the rally, which means closer to 1340 is where you can keep the target for the stock.
All right, moving on. And the first query to you, Vivek, is coming from Karminder Singh, and he wants to take on Escorts Kubota. He's holding 100 shares from a price of 3,125 rupees. What should be the next levels for Escort Kubota, and should he still holding this particular name?
Srishti, see, agriculture and I think in this budget, coming budget vote on account, there should be some SOPs which might get announced for agri sector. And that is one reason wherein Escorts Kubota and BST Industries will be in focus. Now, company has underperformed for quite some time. Long term, it has done very well, but short term, it has underperformed. But the company is debt free. And what I feel is, as and when there is demand in rural, we are seeing in HUL numbers that demand from rural side is still not picked up. So as rural segment improves from here, economy improves from here, I think this company will have good demand going forward also. So you should hold it on for longer term. It's not for short term. Definitely is not going to move in short term. But based on vote on account, which is just 10 days away, something might happen.
Next one coming to you once again, Vivek. This one's from Mayank Saraf, and he's holding 5,000 shares of ITDC at 500 rupees per share. He wants to know whether he can continue to add on to this counter for the next 2-year time frame or so, because he's saying that he believes that he knows, or rather, that the company has a huge land bank and also scope of some divestment happening. So what's your take on that? Fundamentally, ITDC makes sense to stay put with and add on.
See, basically a MNC company and owned by a Thailand promoters. So at these valuations, the company is not looking costly, first of all. And going forward also, they are into, say, one of the finest infrastructure company available after L&T. So what I would suggest is, no, I think the price on the screen is wrong. It should be around 330 something. So ITD cementation, right?
ITDC, that is Indian Tourism Development Corporation, a PSU
Okay,
company. I was also confused for a bit.
No, I was thinking about ITDC. So
Yeah.
anyway, so Indian tourism development again, say tourism sector picking up, and this stock trades at premium valuations right now. But going forward, I think they definitely have a lot of land bank in quite interesting cities. So if there is some kind of say value unlocking which the company might do in future, definitely the stock should do well. I would not suggest buy at this go, but SIP model at these rates would be better idea. And tourism sector, I think if you look at the numbers, because I travel a lot, it is really going to do well.
All right, that's the take on ITDC. Moving on, and Kunal, the next query is from Vishakha, and he's holding 30 shares of Emphasis from a price of 2,221 rupees. Is this a good stock to hold on, or rather, and he also wants to take on Voltas. Is this a good entry point for Voltas?
So I mentioned on Voltas that it's a good entry point. You can look to buy at current levels for even a 12-month plus kind of a time horizon. For Emphasis, on the other hand, I would believe that since you purchase at 2,200 odd levels, and the current stock price is almost 15-20% higher than your purchase price, you can continue to hold on. Better would be if you can try and maybe switch back towards the large cap IT names, even if you're looking at it over the next 6 months to 1 year, because I would believe that large cap IT stocks can stand to outperform and probably gain substantially from current levels many of these large cap IT names. So making that temporary switch could also be a good strategy.
All right, moving on to the next query then. This one is coming from Ajit Walter. He's writing to us from Muscat. He has War Wizard at around 38 rupees per share, about 2,000 shares of this particular counter. What's the long-term view on this? Vivek, have you tracked this counter closely, and what's your take on this on the fundamental side?
So Shiril, I've been seeing this counter since past few weeks, but till now I did not have the guts to buy it. Now, company is into e-mobility. They are manufacturing EV bikes, and the sale is approximately 600 bikes or so. I think last quarter should be around 900. So that's a very, very small company, 2,000 crores market cap. So with if you compare it with sales, the company looks quite costly. It should be more than 100 PE today. I think 178 P. So I'm just waiting to see the sales number, how they progress, because it is going to have heavy competition going forward from the likes of Ola. And being a small company, I don't know what actually they're going to do. So as I said, I'm tracking it. Looks interesting, but I haven't bought it yet. So it will be avoided right now.
Have you seen the charts of this one? Because 38 rupees is the buy price for Ajit already. What should he do? He's already sitting in profit.
Not see the price. I don't track the stock.
All right.
All right, yes, the company is into Joy e-bikes and they have ambitious plans to get into electric cars as well. In the Vibrant Gujarat, they were a participant there. But a lot's to be seen in the times ahead, how the numbers tell you the story going ahead. But moving on, and Vivek, the next query is on HPL Power. Do you track this one? Because Thomas George wants to know, is this a good buy at current market price?
See, going forward, you're going to see that most of the metering systems are going to be electric. And again, the company is also looking at e-mobility. Now, what has happened is e-mobility is one space wherein everybody wants to enter. So historically, I'm in markets last 20 years, and I've been seeing that when one sector is doing good, all companies want to enter into it. And that is what is happening. So at this range, definitely looks costly. I would not buy. I would, in fact, book profit slowly. Though the company has done well, maintaining system, there are few listed companies, very, very few, and hence the stock has done well. But at this valuation, it looks costly.
All right, this one is coming from Sudeep from Mumbai. He's given a list of 4 stocks, but I'll take 2 of them, Kunal, to you. Though he's saying it's a long-term investment query, but he's asking for 1-year time frame. He has GIC RE that he's purchased at 317 rupees per share. Rain Industries, which he's purchased at 235 rupees per share. He is suffering losses in these counters, is what he's saying. Should he basically average, continue to hold, or exit at a loss? And his time frame is 1 year, like I mentioned.
I think GIC is substantially higher than its cost price. I'm not sure. So I think you're making profits over there. Rain also, I think, is something which you can continue to hold on. The stock has gone through an extended period of 3 years of correction from 2020 highs for Rain Industries, when I think the stock was almost at 255, 270 plus levels. So from there, the stock has come back towards 150 mark. It's now coming back into a good value territory. So if possible, you can look to average further so that you can reduce your cost price, but hold is what I would recommend for both of them.
All right, so that's the view on a couple of counters. But with this, viewers, it's time to slip into a very short break. Don't go anywhere. We'll be right back. Welcome back to Buy Now Sell Now show, where we get you answers for all your stock related queries. And today on the show we have Vivek Karwa as well as Kunal Bothra to guide you better. And coming to you, Kunal, for the next query, because it's a short-term query coming in from Kiran, and she wants to take on 2 counters. Astral Limited, where she has bought these shares at a price of 1950 rupees, and she also has Patel Engineering from a price of 63 rupees. Though Patel Engineering has been consolidating in this range for a while, but wanted to know that what's the short-term view for the next 3 to 6 months?
So both the charts are attractive, of course differently poised altogether. Astral is something which is going through a major time-wise consolidation. I think 1800, 1780, 1800 has been a decent support for the stock on closing basis. So you may probably consider that to try and average out further at those levels. And then even if the stock consolidates for say another few months, you might probably be looking at a trading opportunity where buying sub 1800 and then maybe booking profits at 1880, 1900 mark could be a decent strategy for the additional quantity which you can do for Astral. Patel, on the other hand, is going through a phenomenal uptrend. Yes, the last I think 1 month the stock has been a lot more sideways, but when you look at the volume chunk the stock had seen in the month of December start, where the stock moved from I think 50 rupees to 65 or 68 odd mark. I think the volume chunk indicates that this consolidation would eventually lead into a breakout, which could be a very similar paced breakout the stock had seen in the month of December. So would be bullish on Patel Engineering, and I think I would probably keep a 15 rupee target further from current levels. So maybe closer to 75 to 80 odd range is where I would expect the stock to head towards in the next 3 months to 6 months.
All right, this one is coming in from Rebecca, writing to us from Kolkata. This one is for you, Vivek. Lindy India, 2 units at a price of 5,906 odd rupees. She wants to know whether she should buy some more of this particular counter in the portfolio or just hold on to whatever she has.
In a MNC company, Shril, and it's a basically UK-based company. Now, what happened is after COVID, there was a huge demand of gases, and there were limited players in the space, and the company really was undervalued and did well. So going forward, the government and most of the state governments are also ramping up the capacities of medical gases, and hence this company would continue doing well. Short term, yes, definitely looks costly because at 118, 119p, the stock is costly. So I think it is going to be in a range going forward. So what you can do is, if you're looking for long term, then hold it on. Otherwise, you can slowly book profits as well.
All right, moving on to the next one then. And this query that I have is on IOC. And Vivek, Mohit is holding 1,500 shares from a price of 77 rupees. His time horizon is for the next 2 years. For the next 2 years, any target for IOC?
The crude looks stable, first thing. And most of these companies are, in fact, ramping up capacities, reinvesting their capital. And if you look at the stock prices of all the three oil marketing companies, IOC looks to be the cheapest. So if somebody is looking to buy it, yes, I would suggest go ahead and buy it. And you can look at target of around 200 going forward. Even at this valuation, stock looks damn cheap compared to BPCL or HPCL. So IOC would be a good bet.
This one is coming in from our viewer, Vijesh, who's writing to us from Bangalore. He wants to know about Zomato. 5,000 shares at a price of 113 rupees per share. He's intending to hold this for the next 6 months. Makes sense to stay put?
Yeah, in fact, I would believe that you can probably look to hold on to it for an extended time frame. Now, the stock is coming back very close towards its previous highs breakout. I think it's currently trading at 135, but the previous highs is close to 169, 168 for Zomato. And I believe that the stock should at least try and come back to that 160 plus mark as a retest of the previous breakout. So you can continue to hold on. If possible, extend your time horizon from 3 months to say maybe 9 months or 12 months or maybe higher for Zomato.
All right, moving on to the next one. And Vivek, the next query is from Tushar, and this query is on PNB. We all know that Kunal has been pretty bullish on this particular name. But Vivek, Tushar wants to keep it for the next 2 to 3 years, considering the improvement in the financial ratios. He's holding 1,000 shares, but his buying price is 101 rupees. Any targets to look out for in PNB, and what's your take?
The short term, if you are here for short term, it's of no use holding because there is structural and fundamental change in the way PSU banks are working. And going forward, if you look at top 4-5 banks, PNB, Canara, Baroda, and SBI, all this only comes on top of the mind. And these companies have changed the way they look at lending after the bad experiences in the past. And the valuations also at this levels as well looks quite cheap. So short term, no, but yeah, if you are ready to hold it for next 1.5 years, I think once the next government comes in at the center, there will be further consolidation in the PSU banking segment. At that time, these companies are going to benefit. So hold PSU, I mean the PNB, and buy PNB for at least 1 year to 18 months.
All right, the next query that I have, Kunal, this one is from Jay Kumar, and he wants both a short and a long-term view. Firstly is on Vedanta. He's holding 200 shares and his buying price is 200 rupees. So what will be the levels to watch out for in the short and the long-term period as well?
See, I think from a short-term play, the stock seems to be coming back into some sort of a groove. So it's not a major recovery for Vedanta, but then, even though I think from 215-20 levels from where the stock has bounced off, that was a double bottom for Vedanta. On the upside, I would expect the stock to maybe head towards 285, 287 mark. So you can keep that as a short-term target. The bigger targets for Vedanta on the long-term basis would probably be determined once the stock breaks above the 350 levels. That was the high the stock had made in 2022, and from there is where the serious selling pressure had started off for the stock. So bigger targets on the upside from long-term play only could be determined once the stock and when the stock breaks above that 350 odd mark.
Vivek, the next query is for you and it's from Ranjit from Gurgaon. He has some shares of 361 at 6 and he has bought it at a price of around 660 rupees per share. He's asking, should he continue to hold this? He can continue to hold the share for at least the next 1 year. What would be your view here?
See, overall, I think the results were not that good. They missed the estimates, and that's the reason stock might underperform going forward. But if you look at medium term to longer term, I think the stock should do well because the wealth management and the financial markets would continue doing well from here. Overall, they have increased their customer base, and the financial services income has increased, and that trend should continue going in forward. Going forward too. So hold it on. But as fresh buying, I would not advise. But if you are already holding, please hold it on.
All right. Kunal, this query is specifically for you. I'm not sure whether you will be able to answer or not, but Puneet has been writing to us like every day and he wants to take on Happy Forgings. One of the recent listing, he bought these shares like at an IPO price of 850 rupees. Any 1 month target that you can help him with or any levels to watch out for?
Then the data itself is like 20 days, 15, 20 days or so difficult to forecast on 1 month basis. But it's just that after 3 days back, that candlestick pattern which had formed for Happy Forging from 930 to 990 indicates that maybe closer to 920 could be a good base formation for the stock on the short term basis. So difficult to forecast on long term basis or even from a 1 month basis because of the contracted history.
Understand. But Vivek, any take on Happy Forgings by you? Is this a good stock to keep for the long term?
Long term, yes. One of the, a good company in heavy forging and precision machines. So going forward, I think at this level, after the run up, it is struggling at these levels. But if you are looking for a little longer term, definitely it's a good company.
Next query is coming in from Vishal from Dubai and he's asking whether should he sell HUL currently and shift to another stock which would be in renewable and power sector because he's holding another FMCG stock in his portfolio. Vivek, what would be your advice here to Vishal?
See, if you look at the HUL numbers, though the last quarter was basically a festive quarter, you can call it that way, but that doesn't reflect in the numbers. The revenues were flat, the EBITDA margins were flat, and even the profit was quite disappointing compared to market expectations. So it looks like the rural demand would take some more time to pick up. So at this rates, I don't think the stock is going to go down. If you are thinking that it is going to correct big way from here, no. I think it has settled today at 2,400, 2,500 levels. It should continue trading on. So if you wish to go, yeah, it is not going to go up also very soon. So if you want to shift, definitely you can shift.
All right. The next query is a long-term query, Vivek. This one is on Polyplex Corporation. The viewer didn't share his name. Okay, his name is Suraj, is what I can read from his WhatsApp profile. He has bought Polyplex Corporation at a price of 1,515 rupees, 75 in quantity. He's a long-term investor, but since he's in a drawdown, good time to average out. Should he stay invested in this one?
Hold it on. Very interesting company, and the way they are into, say, packaging industry. In fact, this packaging industry, in fact, they are into BOPP, cling films, CPP films. I feel this industry has to continue doing well. You can compare it with companies like EPL, which are also doing well. So I think packaging should continue doing well. So you should definitely hold it on. And valuation-wise also, it doesn't look that costly compared to its peers.
Kunal, the next query is for you and it's firstly on HUDCO. You had suggested someone to buy at around 35 rupees. So should they book profit right now and should they shift to Crompton futures at current prices?
Well, I would not suggest to switch from HUDCO because HUDCO itself looks attractive. Now I understand that the stock has run up exceedingly high in the last 5-6 quarters. I think from 35 rupees odd from where we started off recommending towards the point when the stock is currently at 170 mark. It still looks very attractive on the long term basis. These are how long term trends begin for stocks and for sectors which tend to continue to move up higher on a multi-year basis. So I think rather than judging what level can the stock move up higher, it's very important to now try and ride the trend from a long-term basis. So in that sense, continue to hold on.
All right, that's the take coming in on HUDCO. But with this, viewers, it's time to slip into a very short break yet again. But don't go anywhere. We'll be right back. Welcome back to Buy Now Sell Now, and let's keep it going with all your stock related queries then. And the next query, Vivek, is coming from Subramaniam from Chennai, and he wants an outlook on two counters. Firstly is NBCC. He's holding 200 shares and his buying price is 58 rupees, sitting at good profits in this one. And he also has Royal Orchid Hotels from a price of 159 rupees. What's the outlook on both of these?
See, NBCC would be a hold, particularly because we look at other infra companies. This company hasn't run so much compared to peer group. And going forward, the way they are getting contracts too is looking interesting, and hence it would be a hold. Now, coming to Royal Orchid, one of the say less discussed and a good hotel chain, I think you should hold it on. And if you look at the valuations compared to Indian hotels or any other company, this stock also looks very good to hold on. So both are good stocks and still poised to go up.
Next query is from Padma Siva Rao, Bangalore, and she has around 180 shares of Wockhardt bought at a price of around 245 rupees per share. Kunal, what would be your one-year target for this stock?
Well, recently Wockhardt has started to look very attractive. I think the stock in the last 3 months or 4 months has gained from I think 250 odd levels to 434. In fact, 500 was the high for Wockhardt. Currently, the stock has come back towards 450 mark. So for another 3 or 6 months, I would probably place a target closer to 500 to 550 range for Wockhardt.
All right. Kunal, the next query is coming from Reena, and I guess she's writing to us for the first time, and he has a query on Elkem. She has bought these shares at a price of 4,325 rupees. Is this a good stock to hold on, or should she move out?
I think it's a good stock to hold on. The only concern is that the recent correction for the stock is a bit extended. The stock made a top closer to 5,300. Currently, it's at 4,900. Maybe there could be room for another 200 to 50 points odd correction at least for Elkem. So if you are looking to add on further, then I think maybe closer to 4,600, 4,650 mark would be a better level to buy.
All right, but with this, viewers, let's kickstart taking all your queries in the rapid fire session. And the first query that I have, Vivek, is from Lakshmi, and she wants to know, can she buy and go ahead MRF for a long term at this point in time?
See, tire industry should do well, but the problem in MRF is the volumes are going to be so small that the uptick as well is going to be slow and steady. So at 1,41,000, you can definitely buy. It's a great company, but if you really want to go with high volumes, I think JK Tire is better than MRF.
The next query is from Subbareddy.
You won't get dividends also.
Sorry, you can continue.
I'm saying you won't get even a single paisa dividend out of it.
And the next query is coming in from Subbareddy, and it's for you, Kunal. He has around 200 shares of SBI and 100 shares of Newgen. He's asking whether should he add more or hold this counter, or at present he's making losses on both the counters.
Definitely a hold for both of them.
Okay, Kunal, the next query is from Nitin Parekh. He's already holding Coal India from a price of 310 rupees. At what price he can go ahead and add more?
Maybe I think if it dips down back towards 380, 385 mark.
The next query is from Swati. She wants to know which is a better stock for the next 6 months, Angel One or Polycab. Vivek, what would be your view?
I think Polycab might outperform Angel.
Okay, Vivek, what's your advice on Pushpak Limited? Suresh wants to know, can he go ahead and buy it at current market price for a long term?
Pushkar Chemicals, long term, definitely yes. The specialty chemical space is still struggling, and I think the rebound is overdue.
The next query is from Neha from Boston. She wants to know, Kunal, your view on Ashoka Buildcon and PCBL for the next 3 to 6 months.
Extremely bullish on PCBL, expecting a target I think closer to maybe 400 approximately, say over the next 6 months. But for Ashoka Buildcon, you can keep a modest target of closer to 185.90.
All right, Vivek, I beg your pardon. Kunal, what's your advice coming in on Indigo Paints? Ashish is looking to buy this counter at this point in time for a 12 to 18 months time horizon.
Low volume stock, but currently the charts are looking attractive at 40, 50, 60 for Indigo Paints.
Next query is from Satish. He has doubled his profits in Sonata Software, and is asking Vivek, should he continue to hold this counter?
Hold it on. I think you'll get another 50%.
All right, but with this, viewers, it's time to wrap this edition of Buy Now, Sell Now. Thank you so much, Vivek and Kunal, for joining us today and helping all our viewers with their stock-related queries. But with this, viewers, it's time to say goodbye from me and Soumit, and share Kapil, and the entire team who put the show together. Thank you so much for watching, but we'll see you next week on Tuesday. Thanks so much.